Hey guys, me again. What we're going to do today is we're going to talk about cumulative delta. How to use it, a couple of different examples, both in the DAX using cumulative delta off the open or very near the open, and trades that you can play using cumulative delta around those periods of time. Now, for those of you who don't know what cumulative delta is, what cumulative delta does is it gives you an added layer of information on volume, essentially. Now, if you look at a volume chart, quite simply, all you see is the number of trades done. Now, you can infer the information from that more volume implies, let's say on more volume on a down move, implies that that's a stronger down move. However, what cumulative delta does is it allows you to see the action that's gone into making that move happen. So what it shows you is the comparison of aggressive versus passive orders. And what you're looking for essentially is a point where the aggressive orders take control of any kind of move. As a good analogy for this, the difference between a passive and an aggressive order is quite simply the difference between somebody willing to pay the price that somebody's offering or somebody willing to move to the price that somebody wants to bid. So take the example of if I'm buying a car. If I'm buying a car, what I can do is I can go into a showroom and I see a car, let's say it's £20,000, and I go, right, I will pay that for the car. Effectively, I am the aggressive buyer here. The price has been set and I walk in and say, I will pay it. That makes me the aggressive buyer. So in that respect, delta would go up by 20,000. Now, delta would go up by 1 if you treat it as a contract traded. Now, if I go into a showroom and look at a car and I say, yeah, I like it, but I'll give you 19,000. And the person in the showroom says, okay, you can have it for 19,000. They're the one who's taken the action. I've provided them a bid and they've hit it. And so that then gives you a negative delta, i.e. they've sold. And that's what you're looking for. And that's what delta is trying to show you. Is it a case that sellers are people willing to keep on selling and they're willing to drive price? And the other question there is then, are they doing a good job of it? This is where delta gives you a huge amount of information and tells you whether a trade is worth taking. Importantly, it's about understanding whether the setup that you've got is enhanced by delta. That's the way that I'm always looking at it. Delta's not there to tell me, take this trade. You know, you're seeing delta going up. That doesn't mean I want to buy. What I'm looking for is a situation where I have a trade idea. I've got this structure and then the delta says, yes, this is a good idea. This makes sense. You're adding color. You're adding information to your trades with delta. You're not using delta as an indicator alone and the point of you to say, yes, I'm going to take a trade here. It's the build up of that information that then says to you, yes, this strategy, this structure, this setup is viable. And this has now got almost enhanced viability on the basis that you've got people already selling it as you get to the point where that trade's actually going to play out. That's what the value of cumulative delta is. I'm going to give you two examples here. And what we're going to go and look at is a delta divergence, where what you've got is price rising and delta falling. Now, in a situation like that, what effectively is happening, if price is rising and delta falling, then buyers are passive in the move higher. So as the move goes up, buyers will progressively raise their bids. So the bids will move higher, but they're waiting for sellers to come and hit them. And then when sellers hit them, they will continue to absorb that. So they keep on sort of going, yep, we'll take that, we'll take that, we'll take that. And as price then moves up, because you will get a bit of buying, you know, don't get me wrong, there are buyers. People will have to hit market to get price to rise. Price rises and then sellers come and sell again. It's the sellers that are in control. There's more people actively selling as the price rises rather than buyers actually hitting into the offers to actually push price higher. Where that helps you is you can look at this and think, I don't trust this move up. What you don't want to do there is just start to sell. What you need to be waiting for then is a setup, a situation that allows you to sell. And as long as the sellers are still in control, that they're still the people hitting market, they're still the people hitting into those buyers, pushing them back effectively, then once you tip that point where sellers gain control technically as well, as long as buyers move out the way or sellers overwhelm them, once price continues lower, that's where sellers then really take control. And it turns into, rather than sellers hitting into buyers that are willing to passively move orders up, those passive orders disappear and sellers now have to hit lower and lower, faster and faster. So delta will then continue falling, but this then drives price. The other version I'm going to look at, and both of these are in the DAX, quite simple short-term trades. You could almost call them scalp trades. In the DAX off the open is where you get delta confirming a move. What this helps you with is staying in. So you see delta driving towards the upside. You've already got a trade that you're looking to play up. As delta goes higher as well, that's showing you that, of course, you're buying, you've bought, but also other people are now willing to hit into the offers. They're attacking those people who want to sell and pushing them out of the way. That's where delta helps you stay in a trade. So it's always a case of, cumulative delta is there to enhance your understanding of a trade that you're already looking for. I'd never use cumulative delta to tell me you want to take a trade now, because what it doesn't help you with and what it doesn't tell you is price. So there's no way of managing risk off cumulative delta, and what it is there to do is to enhance the situation that you're already looking at. So let's go and have a look at these two examples. First example then, this is quite a simple delta divergence head and shoulders pass. So I've got the date on this, so if you want to go back and check it out, you want to go back and replay it, if you've got a replay function, go back and have a go at this trade. Now, what we're looking at here is this is a 1 minute chart of the DAX just after the cash open. You can see the cash open, it's where the volume spikes up. So there's your volume jump. Now, this is exactly that point. Volume jumps up, delta doesn't move. You can see the little delta candle here. So yes, this suggests from a volume perspective, this is a strong move up. But ultimately, there's been no shift in delta. So it's actually quite neutral in terms of people's willingness to buy and sell. And the bit that you're now interested in is once you then start to get this break higher, what you're watching here, you get a decent move up. Volume, okay, not as big as the open. Delta punches higher. This is good. And if you're looking to play this move, don't get me wrong, this is a decent trade to be taking on. You see, delta will, and it's always easy to see after the fact, but delta will have increased even as you first start this move up. That's where delta will have jumped up. So you'll see this little poke up of delta anyway, which may well be enough to give you the opportunity to enter on the break above 514, giving you this run higher. So decent trade there. You're using delta to play the breakout, but it's what happens after this. As soon as you get this one move higher, delta drops almost immediately. And this follows on. Price goes higher, so you get a new high, and delta doesn't even reach the same levels and then starts to fall again. This drop in delta is very significant. Sellers are completely taking control now. They're hitting into all the buyers that are there. So as they're doing that, that's showing you that really you're running out of buyers here. The only buyers are people waiting to get filled on pullbacks. Now, if this selling pressure continues, those buyers, particularly on a break of any kind of technical area, are going to get forced out of their trades. And that's what happens here. You get this very fast run up. So the way I'm looking at this is I'm thinking to myself, okay, I don't trust the move higher because you're not getting buyers coming in. Now, you can't sell it. I don't see any reason to sell it up here. You're breaking new highs. Why are you going to sell that? So you're not looking to sell it there. What you're looking to do, or what you're thinking about now, is you're thinking, okay, sellers seem more in control here. Do I have an access? Do I have a point where I can have a go at selling this? Now, after this high, you start falling back. And at this point, all I'd be thinking is break this low and maybe we can go and reverse this move up. So you're looking then for the reverse of this move. So you think, okay, fine. Still don't want to buy it because delta's now even lower than it's the lowest point that we've been all day. It is moving into negative territory. So cumulative, you've got more sellers today than you have buyers. So as price starts to rise again, what it helps you with is not getting involved in playing the second wave to the upside. And then you start seeing a head and shoulders form. Remember, this is only on a 1 minute. And a 1 minute head and shoulders patterns work. They work really well, particularly when you've got a situation like this. And once again, as price starts to fall, delta starts to roll over. You get no real delta increase on the move up. Now you're starting to think, right, now I've got a setup. I've got a technical reason to sell. I've got the delta reason to sell, that sellers are in control. And I've got a clear target back to these highs around 514. That's the initial balance high. So you've got all the hallmarks of a trade here. So what you're now looking for is a drive through the head and shoulders neckline. Simple head and shoulders trade. And this is the thing. This is where Delta enhances trades for you. If you play every single head and shoulders, it's got a reasonably low win rate. But if you play a head and shoulders that has now got cumulative delta dropping, i.e. sellers are now in control, you boost your win rate. You're able to then take the trades on that have actually got reasoning behind them to sell. So the delta starts to drop, or you've seen delta drop already. You already know that this is a weak move up based on the delta. And then you break the head and shoulders. You can sell that. You can put your stop back above the trend. That's how you play a normal head and shoulders. Stop back above here. Once you break back down below 537, you get this reasonably clean 23 tick move down towards 515. It's not a gigantic move. And this, the business isn't about finding the massive moves. It's finding consistency. It's finding trades that you can understand in detail that have got greater validity than just a simple head and shoulders pattern. That's the value of cumulative delta in this situation. It's that what I call a delta divergence. It doesn't have to be a head and shoulders every time. You're using delta divergence, and as you see that, you're then looking for access. That's the key word. So think about that in any of your trades that you're taking on. Access matters. It's not about selling because delta's going down, because I've seen situations like this where delta will just continue going down and price will continue rising. You will then end up averaging, and you end up blowing your day, possibly your account. So it's about picking a point where you can say, okay, I've got the situation that stacks up to this move. Now I can play it. Right, next up, what we're going to look at is a delta confirmation. This is another one in the DAX off the open. Now, this is to play for a gap close. So what we're looking at here, and to give you a bit of context, this is the initial balance. So it's 7 to 8 o'clock. I can do another YouTube on initial balances and why you use certain times on them. But initial balance, 7 to 8 o'clock UK time for European equities. So it gives you the first hour before the cash open. And what we've got here is a gap down. There's your previous close up at around about 670. Gap down and sell off. So okay, you're getting a slight bearish outlook here. What you're going to be thinking though, and this is the way I'd be looking at it, we've had a breakout of a previous week's range. We've also left value significantly higher. So unless we can get this move to sell off and get down really well into previous week's value, so back down below 516, you don't have a great deal of reason to believe that this market has to go lower. Therefore, anything that fails to get outside of the IB, or anything that breaks back above the initial balance high, so around about 604, gives you the opportunity to play for the move back towards value. So that becomes the context of the trade and the potential opportunity. Now, you can't just buy. If it keeps dropping, this could turn into a trend day down. So what you're thinking about is failure lower, I can play up. Break of the IB high, I can play up. If you break lower and don't come back higher, i.e. leave single prints down here, and this is a trade for another day, then you can look for the move lower. Right then, so here's your delta confirmation trade. What we're looking at here then is, this is the 1 minute, there's the gap up there, which gives you a target of around about 15,670. There's your gap target. You don't know that this trade's on initially. And what you're looking for then is as you come into this day, you're seeing the initial balance forms, the initial balance low comes in at 557, and then you get the breakdown. So once again, first minute of the cash open, no real change in delta. A little bit of volume towards the downside, shows a bit of weakness, but you're not really reading too much into that because there's no shift in delta, slightly above average volume. Then what you start to see is a drop. We start to see the push down, and this sends you around about 30 ticks towards the downside. The point where the gap close becomes a live trade, and this is something I always find very important. You've got to look at a trade. The gap close is always on until the gap is closed, but the trade doesn't become live until you get back realistically inside the initial balance. So trade doesn't come live until you get back inside the initial balance. So above 557, that's where you can now start thinking about buying. And what you get here then is what I call a delta flip. Delta starts to push towards the upside. Delta's already generally been moving up anyway. Delta then starts pushing up, and you start to see a bigger jump in delta. Now you think the trade's on. So once you see that, you can start looking for anything that potentially gives you an entry up here. So anything above basically 545 gives you an entry, so 12 ticks before the initial balance low, or anything above 557. Get above there, you can buy. Stop below 545. You've now got around about 113 tick target on this trade. Now what you need to see here is Delta confirming it. You need to see buyers continuing to drive this move up. So you need to see buyers attacking the sellers, i.e. hitting market, taking those sellers out. That shows aggression with the buyers. So you're looking at a trade now, long around about 557. Your first thought is, can we get up above 604? If you can push above 604, the trade's on. If you get up here and Delta has flatlined, Delta has started falling, then that's going to be your exit. But the fact that Delta continues to move higher is helping you stay in this trade. This is where the Delta confirmation comes in. Buyers are very clearly in control. Delta keeps rising. Now your target is the gap close. And so then you can sit through this, you play, the break comes, you get the further acceleration above 604. Once you're out of the initial balance, you can move your stop up inside the initial balance. You've now banked essentially a 40 tick winner on this trade. And you then let this move all the way to fill the gap, which gives you a move all the way up to 670. That's how you're using Delta. It's not about using it to tell you when to trade. It's using it to enhance the situation that you're already looking at. So that's how I use Delta. It's a tool that I brought in 2016, a tool that I think is a wonderful way of enhancing your understanding of what's currently going on, enhancing any setup you've already got by giving you that extra bit of information that makes the setup so much more valid. And it allows you to differentiate between one setup that on paper looks okay from a technical perspective, but you need to understand how people are transacting. That's what the Delta does for you. Otherwise, all you have is prices pointed out. That's all you get from candlesticks. They just show you prices that have traded. They don't tell you whether people are actually more willing to buy or sell. That's what Cumulative Delta will do for you. Bring it in, try and use it on some of your trades. Use it on DAX opens. Have a look how it plays out. If you've liked this video, you got any comments, get your comments in, hit that notification button, subscribe to the channel. You get to see more videos like this, and we'll do one on profile and those initial balance breaks. I'll leave you there, guys. Take care. We'll see you on the channel very soon. Cheers.